let's go ahead and just take the time for now to open it up for conversation. Open it up for any questions that you have. So what I'm going to do is I'm going to go around the room to each individual, give you the opportunity to unmute, and then for you to ask one or two of your most pressing questions, and then we'll be able to take it from there. Now, one thing I will say just for uniformity and being able to get through all of you, please limit this to your either best question or at the very most two questions. Keep the context fairly short. Question first, add a little bit of context if you need, and then we'll go ahead and get that question answered for you. So we'll go with the first person is going to be Patrick, then we'll move to Brian, and then we've got iPhone 440. So we'll start there. So Patrick, go ahead and unmute, and we'll go ahead and start the question and answer portion.
Couple of questions. So when I met with Zoe, she answered a lot. So that was super helpful. I guess my question would be, you mentioned cutting it off at 1,000 people. Kind of what's the rationale or reasoning behind that? And then along those lines, you mentioned currently being at, I guess, just over 800 people. Kind of what's the average return across that group? I know you mentioned people have different tiers. Are you able to share a little bit of those numbers? And is there anyone, whether it was early or late, during political turmoil, during market challenging times that are losing or have lost?
Yeah, great question. So the rationale for the 1,000 clients is just for me to be able to maintain a good working relationship with the clients that we have, right? We don't want to be oversaturated where I don't have the ability to have FaceTime with our clients. For the most part, I approve every single person from like a face-to-face basis, make sure everyone's on the same page, make sure everything is clear on the front end. And that's why we have like extremely low churn. The only churn meaning, people that may need to leave. The reason why is just has been because of medical concerns that accelerated faster than they anticipated. It's literally been the reason for those for that churn. And so that's been helpful for us to keep it small, keep it intimate, to make sure that every request or all support is responded to within an hour during business hours, and all those things. So we want it to be as streamlined, as efficient as possible, and not have too many individuals to where it starts to become too much to handle. Right. Cool. What was your other question again? I'm sorry.
It was just along the lines of kind of average rate of return for the different tiers, if you know that, if you have that data.
Yeah, so the average rate of return. So I'll go back to the screen that we were just on. It's around 40% for our investors.
Perfect. Thanks.
Yes, sir. All right, so we've got Brian and we've got iPhone 440.
Hey, Aaron, thanks for taking my question. Hey, it was pretty much along the lines of what Patrick just asked, and that was about the maximum number of clients you're going to take. So I think you answered that question. So let's say you get to the 1,000 clients, will you then waitlist clients after that? So as you know, let's say people cycle out for whatever reason, maybe health or what have you. Would you bring on additional clients just to keep yourself at that ceiling of 1,000?
Yeah, great question. So, I was hopeful that we got to 1,000 clients, 3 years ago. I was like, oh, this will be great, changing so many lives and all that. Now that we're getting closer, I'm like, oh crap, I did say that. And I do like the idea of being able to cut it off. And so we just in full transparency, Brian, we're still working through how exactly we want to close things off, if we want to make it a wait list, if we want to add more capacity in terms of having even more offerings that don't require my direct involvement or need any of my input, so to speak. So that is something that we are exploring at this point. But the main thing for us is just making sure the quality remains as high as possible. And that's why when we have the Q&A sessions, I get to know you a little bit more. Most people know me a little bit more than I know them directly at this point. And so just making sure that we take the time to speak to everyone and get an idea of what their goals and expectations are, make sure we're all aligned. That's the most important thing for now. And how we move forward here will determine over the next several months.
Got it.
All right, so we got iPhone 440, then we'll go with Danny Lynn, and then we've got Vivian. So iPhone 440, you can go ahead and unmute if you're in a safe environment. Give you a chance to unmute. And if not, you can put your question in the chat. Danny Lynn will come to you, and then we'll go to Vivian and then Vincent.
Oh, so me and Vincent Lin is a husband and wife team. So can you
Nice.
put
You said, could I, what is it?
Vincent Lin, you see him?
Yeah, I see him.
He's husband. Yeah, Joe knows it. So
Okay. So Vincent is a spokesperson. Okay.
yeah.
Oh, I guess so. I didn't realize I was going to be the spokesperson, but sure. And I have to apologize. So Danny has definitely has a little bit more, or has a lot more knowledge on what ATN is and everything that you guys do, than I do. So I guess these questions might be very general that you guys have already spoken about. So I apologize for that in advance. So if you don't mind, like, in the highest form possible, I guess, how are you able to achieve, I guess, these numbers? I mean, these numbers are obviously, really great. And if you don't mind just dumbing it down for me again, in terms of how you're reaching the 80%, 60%, 120% returns, that'd be great.
Yeah, for sure. So it's high frequency trading, right? So most trading back in like the 80s and the 90s, you had to like click, 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 right? And
Right,
you
right.
get into a position, you exit a position, and that kind of happened at the speed of what manual capacity would allow for it. Versus now with machine capabilities, so quantum computing, algorithms, high frequency trading. Now you're able to use the softwares or bots or algorithms in order to trade much faster. And then use the actual settings of those algorithms to predict the way that the market is going to move. And so that allows for us to get in and out of trades more frequently instead of only being able to take 20 or 30 per day on a manual basis. You can take 200 to 300 per day with the algorithms. And so that it just allows for you to operate faster. And Wall Street has actually been using it since the late 90s, early 2000s, and it's just been more popularized on the retail side of things over the last like 10 years. But even still, it's like, having access to, a car with like 2000 horsepower, right? Where most people aren't going to be able to handle that type of, ability. But that's why our professional trading teams are the ones who operate it. So that way you can remain passive investing, remain a passive investor. You don't have to learn how to read charts or execute trades or do things of that nature. And you can, focus on your family and the people that you care about the most.
Oh, that's awesome, man. So is there a minimum? You're saying, hey, it's good. Is there a guaranteed floor or base or anything like that, or not so much?
Let me ask you, what other assets do you have as far as in your portfolio?
So zero in terms of stocks wise, like that's why like I'm asking you to dumb it down for me.
Understood.
Because
Okay.
yeah.
Right. So this would be just in the same regard as how you would maybe ask your stockbroker, what kind of guarantees do you have? Does anybody have the opportunity to unmute and tell me what guarantees your stockbroker would tell you?
Yeah, fair enough. So like I mean in general, so there's no guarantees, etc. Like that's absolutely fine. So the principal, everything's all at risk. That's okay. I was just curious because I mean these are pretty decent returns, and I'm guessing like you've been doing it for a few years on average. That's what you guys are doing on average. So my guess is you guys haven't really lost at all, if that's what you're doing on average, right? So
Yeah.
that's what,
So there,
yeah.
let me clarify, because that would just be irresponsible for me to say that we haven't lost. The thing is, year over year, those have been the
Mhm.
returns. So although intraday, intra-week, intra-month, there could be losses, there,
Oh, for sure.
year over year, there's been those type of gains. And so I just want to make that clear.
Okay, cool. Yeah, no, that sounds good. Is there obviously we're not going to get involved with, the daily trades or however you guys do your thing to make it happen, but just curious, like, is there, you know, a way that you guys look at whether it's market or whether it's just strictly by graphs, like, that day charts, like, is there a certain specific driver that you guys kind of lean on? Or like, markets, is it domestic, international, or it's just like just anything and everything?
Yeah, great question. So the main asset class that we use is called foreign exchange. Foreign exchange is
Ah,
the world's currency, right? So it's Australian dollar, New Zealand dollar, Great Britain pound, US dollar, the euro, all of the above, right? And so you have what's called pairs. So you pair two of those asset classes together, and that is what creates the trades that you're going to use. And so how that looks. Wait, so what was the other part of the question? I apologize.
no, that was it actually. I just went a long way about asking it. So Forex is like that's it. That's perfect. So you guys
Yeah.
just do foreign exchange. Okay, cool. And
Foreign exchange, and we do have a crypto algorithm as well, and that's going to be the part of the diamond option that we have.
cool. No, thank you for explaining. And I apologize. I'm taking a bunch of people's times here. Is just really good. If
No,
that's
these are
okay.
straightforward questions, and sometimes you just have to zoom out and just make sure that you understand the components that make up what we do. So that makes total sense. No issues there.
Perfect. Thank you, man. Appreciate it. So in regards to
Absolutely.
your algorithms, you have the 3, 5, and 8. Like same thing. If you could just explain to me, like, well, what is like, there's three different ones, but if it's all within Forex, like, what do you mean there's three, and what's the difference between like having 3, 5 versus 8?
Yeah, so three algorithms, they're all going to be different, right? So, they will have different parameters that they're set to. What is their strategy? Are they looking at technical analysis? Are they focused on fundamental analysis? So the different styles, the different strategies, when they want to take profit, how deep into a sequence they want to go. So like, do they want to trade 50 trades a day? Do they want to trade 300 trades a day? How does all that work? So those are kind of some of the differences without going too deep into it. Those are some of the differences for each of the strategies. Most of them are uncorrelated, and which means that they don't necessarily go straight in line with each other. Otherwise, it wouldn't be a really good diversified thing. It'd just be like, kind of just like keeping the same risk in multiple different baskets. So that's kind of the main thing. The most of them are uncorrelated, and so
Hmm,
if you have one that may be a little bit down, you have another that's a little bit up, and vice versa.
nice. Okay, cool. No, I appreciate it. So, and one last question, and I'll get out of your hair here, is retention of your clients. So, you have 800 and some odd. I mean, I think that's great and amazing. Over the years, like, what has been the retention rate?
Yeah, the retention rate has been it's been above 95%. So we've been very fortunate to have high retention that way. And so we've been fortunate there.
Nice. Well, what is the average amount, like out of the 800, would you say that people decide to invest in, and continue investing more or reinvest with you?
Yeah, the average is 100K.
Okay.
Yeah.
Okay.
So that's the average, right? Some people start with 10, 20,000, and there's some people that start with a 500,000. So it just depends on how you want to start. Some people come in more conservatively, want more proof of concept, see how this works for a few weeks, few months, what have you. And then some people are like, hey, I've got this financial goal. I'm trying to hit it. I know that these numbers are going to hit on the conservative side. So they'll come in with a 500,000, so to speak.
Awesome. Hey, Aaron, man, I really appreciate you taking the time to explain everything to me. But yeah, last
Absolutely.
question. That was it. Thank you.
100%. Love it. All right. So we got Vivian, then we've got Jay, and then we've got Kevin. So Vivian, we'll give you a chance to unmute. And then we'll go to Jay. And Vivian, if you can't unmute, you can put your question in the chat. So we'll go ahead and move to Jay and then go to Kevin, and then we've got Theodora.
Hey, nice meeting you. Great questions so far. I guess most of them were already answered. So if I started in the gold tier, I can always move up in tiers.
Yes, you can.
Okay. And then like most of my investments is mainly with Schwab. I can watch them. I watch them way too much. I hate the downs, love the ups, of course, but is this something that I can watch at all times?
Yes, absolutely. Yep. You have access to it is your brokerage account. Only you have access to your brokerage account. You do a KYC and all of those things for that. And you can watch it as frequent as possible as you want.
Okay, sweet. And then at the end of the year, I assume that we'd get 1099s for
So you
any
don't get
capital gains and whatnot.
So you don't get 1099. You will have access to all of your statements that you would send to your accountant. If you don't have an accountant, then or don't love your accountant, we do have one that we find to be very useful for us and what we do. But yeah, so it's not a 1099, but you will have your statements at the end of each year to where you can get them over to your CPA.
Okay, so it'd be pretty much just like my Charles Schwab at the end of the year, they give you the statement.
Yeah,
Okay.
the only difference is it won't be called a 1099, but you will have your transactions and your statements there.
Okay. All right, cool. Thanks.
100%. Okay, Kevin, it looks like you mentioned you don't have any specific questions. All right, so you yield your time to the rest of the group. All right, so we've got Theodora, we've got David Lackner, and then I'll go back to you, Vivian, if you had the opportunity to unmute. So we'll go with Theodora first.
Hello, Aaron. Can you hear me?
Yes, ma'am.
Yeah, it's glad to be here and finally getting to meet you.
Yeah.
What I wanted to find out, I'm sorry, I'm supposed to type this, right? Or it's okay?
No. Yeah, you can speak it. Yeah.
Yeah. What I wanted to find out was, and I think the question was already asked.
Some of the taxation that's there as well.
All right. Thank you.
Yeah. Okay, that was the only question. Got it. All right, so we got David Lackner, and then I think I see a message from Vivian in the chat. So go ahead and David, you can unmute, and then I'll get to the question in the chat.
Yeah, the in the gold, for example, when it says 40 to 60%, that pre-split? In other words, before you split it 50-50 in the gold category, for example?
Yes, great question, great distinction. Yes, all of the different historical returns are going to be pre-split. Great question.
So my question would be like, let's say I came in at $50,000 initial investment in the gold category. Approximately 25,000 of it comes off the top. So really what I'm trading with is $25,000. Is that correct?
No, so it's 50-50 on the profit split, right? So let's say your $50,000 generates 5%, it's $2,500 for the month, right? And then you split that 50-50.
No, but isn't there an initial? I thought there was like a 24,000 initial fee.
Yeah, that's separate, right? So we just be clear on there's the package fee. So that's the amount to get access to the algorithms and everything there. And then you actually need to fund your brokerage account with whatever capital that you want to be trading. So those are separate fees. So I see what you were doing. You're saying you have 50,000 total to invest, 24.8 for the actual access, and then 25 or so for putting into your account. then yeah, you would do the math on the 25K, you know,
Right.
based.
Well, the thing that I didn't understand is if you're coming in, let's say with 50, 24.8 or whatever it goes to, you're left with approximately 25, and then you're at a 40 to 60% return, half of what you receive. It would take years to get back to your $50,000, like over 3 years, even at 60%, meaning you'd get 30% on your money. I understand it compounds, but it'd take almost 3 years to get you back to your $50,000.
Yeah. So there's a few things to that. You know, first would be the estimates or the performance, you know, you can see there, those are for the most part conservative. So we're wanting to under promise and over deliver. Also, there very much so is an ROI component to this. And that's why it does matter how much you do fund your account with. That's why the average is closer to $100,000 on average, is because you do have to consider those ROI components. For us, we look for having about a 12-month ROI overall is where we shoot for, because we understand that if you're going to a business opportunity, typically the ROI is going to be a little bit more than 2 years, typically closer to 3 years. And then, of course, you know, for traditional investment, you know, 5 to 10% annually, you would imagine about 7 years to be able to return your capital there. So for us, being able to be around 1 year has worked really well for us. But it's true, it would take 30 years if you only put $1,000 in your account or whatever the math would be. So it does matter how much it does matter how much you fund your account with. Absolutely. So you would want to take that fully into consideration before you made a decision.
And if I wanted to jump, let's say, try it at gold, let's say, and then jump to the diamond, would the fee that I paid for the gold be taken out of what I think it was around $60,000 or so for the diamond? So if I've already paid 25 in, would it be just the difference, or I have to pay the whole 60?
Great question. It would just be the difference.
Okay. And okay.
Yeah.
That was it.
Love it. Excellent. Great questions. And so Vivian, I see your question or your kind of thoughts here on, you know, possibly recession and investing. Yeah, 100%. That there's a reason why. So the stock market, it trades around 500, 600 billion dollars per day. Let me make sure to fact check myself here. Let me just make sure, because I know the numbers, but I just want to make sure. Okay, how much per day does the stock market trade? Okay, stock market trades about, yeah, around 250 to 400 billion dollars per day, and trade versus foreign exchange is around $5 trillion per day. So anywhere between 5 and 7.5 trillion dollars per day. So what we understand about, you know, recession and, you know, typical business investing, we're mostly talking about domestic, right? We're mostly talking about within the United States. And so with being within the United States and the stock market being around $400 billion per day, that is about 40 times less than the volume of the foreign exchange market, which is the global economy, right? So it's less about recession in the United States or, you know, kind of, you know, what Trump specifically is doing. If you're trading on the euro and Australian dollar, that has nothing to do with the United States. If you're trading on the Great Britain pound and the New Zealand dollar, that has nothing to do with the United States. So that's why we focus in on the foreign exchange market anyway, is because it allows for us to tap into the global markets and not be so concerned about the rise and the fall of the dollar and how things are going on in the United States. So it gives a good amount of a hedge to traditional domestic investments. Hopefully that helps with the question. With that being said, I'll go ahead and stop right here for any additional questions before we do hop off the line. And so if anyone has any follow-up questions that we've not addressed to this point, I'll go ahead and answer those now. Love it. No additional questions. I look forward to being able to see all of you on the other side, and you all have an amazing rest of your day and a great week.
Thank you.
Thanks,
Take
Aaron.
care, everyone. Absolutely. Bye.